Welcome back to the C Morning Show, everyone. We are almost at the halfway point of our program, which is leading us to our first discussion of the day. Now, many of us make New Year's resolutions, and a lot of those have to do with our finances. And as business gets back to normal, we're now thinking of ways to save our money. And one of those ways is to save our money at the bank. And while we do that, many of us may overlook the interest that we can potentially accrue, as most of us only think about administrative costs, correct?
That's right. You know, doing the conventional way. I love that. So how much interest can we actually get from saving our money at the bank? And what should we do when we want to take a bank loan, especially right now when interest rates are rising?
Well, lucky for us, we've got just the right person in our studio with us, financial planner Metta Anggriani, who will talk to us more about this topic. Good morning, Metta. Thank you for joining us.
Good morning,
Happy New Year.
Happy New Year, Carol.
Right, so let's talk a little bit of money. What do we need to know before we put our money as quote-unquote savings at the bank?
Well, of course, when we put money in the bank, we become the customer of the bank, right? It's actually, you know, when we get being a customer of the bank, we get the facilities of the bank, right? We use the facilities, you know, it's for transactions. And if we want to accumulate the money, so we want to get more interest. And as well, we can use a facility for if we want to take some loans, right? But other than that, we can also, you know, by opening a bank account, we get the credibilities because then we are being verified and, you know, it's clear that we are eligible for a bank, we are bankable, right? So it's actually a term that we get the benefit from the bank. So, but the banks itself is also, you know, they're offering their services to the customers. Their main products are savings and lendings, right? And to make the products attractive, they offer interest rates, right? And with that, they will charge the fee, you know, as the. So, for us as a customer, then we have to understand both the interest and the fee for every services that we use from the bank. Now, so how does the bank set the interest rate? Because, you know, the bank industry is very highly regulated, right? Because then, you know, it is to protect the customers as well as to maintain the financial stability of the countries. So there is a system in the country that, you know, the central bank set the molded interest rates. So every bank, they have to refer to that.
That's for both lending and for assets, right?
Right. So that's why they cannot set interest rate at, you know, whatever they want.
Anything they want, sure.
Yeah. So that's why, again, as a customer, we have to understand where is actually the interest market rate.
Okay.
Right. So we know if right now the central bank is increasing the interest rate, right?
Yes.
And they have been doing it for quite some time right now, you know, since the pandemic. And it's not just Indonesia, but the central bank in other countries, they're doing it as well because the interest rate is actually a monetary policy for the government to, you know, to control the inflation, to maintain the buying power of the consumer, as well as, you know, there's a policy to ensure the money supply in the market, right? So when they increase the interest rate, the intention is that people are becoming more interested in saving the money in the bank. So they kind of like collecting the money from the market, so people will tend to less consume and the market price will be managed in the market, right? Right. So now we see, as a customer, we see that the interest rate is increasing. So maybe it is time to, again, to put money in the savings will be interested because then I can make more money in the savings, right?
Right.
But again, as a customer, sometimes we don't think about the interest.
No, I've only, because we're doing this discussion, I have a separate account just for extra savings that I might need for a rainy day. And because we're going to do this talk show, I opened it during my break. So I use it for term deposits and then it rolls over back into the savings side. I'm getting 7% for a term deposit, which is quite good for these days.
Yeah.
But the savings portion of it is actually getting 5%. Is that correct? Like, it's quite high.
That's quite high. That's the savings account, right?
Right.
But you know, when we open a regular bank account, you know, like this conventional bank account,
like a day-to-day activity account, right.
You know how many interest rate that we get?
It's quite low, I assume.
You know, it's actually less than 1% a year.
Okay, there you go.
Right. And every bank has a different way to calculate it. Sometimes they require a minimum amount of balance.
Okay.
And sometimes, they use a different base for calculating the amount. Sometimes they use the lowest amount every month, or sometimes they use the daily
Isn't
average.
okay, so most of them are daily from what I know, right?
Daily average.
Right, daily average. Okay.
So let's do a simulation, yeah?
Yeah.
For example, if you have average balance in your bank account like 10 million rupias.
Okay.
Already way more than I have, but go ahead.
Yeah.
For example, that's for a simple calculation. So you get, let's say it's 1% per year.
Right.
So you get interest is 100,000 rupias per year. So a month is about 8,000 rupias.
Okay.
And that is taxable.
Right.
20% tax.
Yeah.
So net, you will get
Cut it again.
6,600 rupias.
That's 1 month, so
Right.
it's about 2,000 per day. Or, yes, something like that.
Not per day. 6,000
Wow, this
per month.
Per month?
Per month.
Oh,
Right.
so much, much lower.
Yeah.
And you think you will get profit, right? But how about the bank administration fee?
Yes,
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 okay.
you have
Right.
that.
Yes, and again, every bank is different.
Yes.
Right? And it depends on your bank account types.
Yeah.
Now they have a digital bank account,
Yeah.
regular bank account, premium bank account.
Including if you want to transfer from different banks to a different
Yeah.
bank, you have another fee right there too.
Yeah, so in the end, maybe you didn't get the interest, you didn't get the profit.
Yes.
It's true.
You
You always
paid
think
it.
about that as
Yeah.
well. I put my savings in a different account, but
Yeah.
every time I want to transfer there, it costs me another
Exactly.
6,500 as well. There you
That's
go.
those the numbers.
Eating into my profits, guys.
It's just it's very different nowadays. Remember when we were kids, I think we've always been, kind of like sanctioned towards saving your money in the bank, because we know when we got money, whether that's for New Year's or whatever that is, we put it in the bank, but we
That's how
don't
we were
know,
raised.
like, the factors of like saving the money in the bank itself. When you're now an adult, you need to know like all this, right? The
Right.
interest and whatnot.
So, I mean, like for customers, then we have to know, I mean, like, that is, the checking account is actually, for your transactional.
Yes.
So
Right.
it's
Yes.
the operating bank
Yes.
account. So that's why in the field of financial planning, we
Yeah.
always advise people do the budgeting, right? So when it is payday, maybe it's better for you to allocate your money first to savings account.
Right.
So then that amount of money, you go straight to your savings account, and the left, save it, put it in the transactional bank account where you can spend it every day.
Yes.
Of course, you don't expect a high interest rate because you will
Of
spend it
course.
every day.
Yes. It's
But
rolling.
rolling, right?
Yeah.
But then in the savings account, you expect it to grow.
Yeah.
So you don't withdraw every day.
Yes.
And if possible, you can top it up as frequently as possible.
Right.
So then, in order for you to do that, you have to understand what products offered by the banks,
Mm-hmm.
right? They offer, a savings bank account. They
Yes.
have the bank deposits.
Yes.
And sometimes they also sell other products like mutual funds, or they can also be the distributors of like the government bonds.
Yeah.
And that is offering the higher interest rate. And if we can do that, so maybe we can get a higher interest rate, higher than the fees that
I know.
charge for us,
And
right?
such a large balance to be able to
Yes.
carry over an interest.
And there's just so many products that
Right.
has been given by different banks. Sometimes you as a
Right.
customer itself, you kind of like don't know which one to choose, right? Which one that would do you more favor. Now, in regards to interest though, Mbak Metta, we're talking about saving interest and deposit interest. What are the difference between both?
Well, yeah. Actually, it's similar, right? But actually, the interest you will be calculated based on your balance, and then you will depends on how long the money stays in your bank,
Yes.
and you get the interest rate. But for deposit, of course, the terms is different. Sometimes it is required that your amount stays in a bank for a certain period,
Yes.
so you can withdraw.
Yeah.
If you withdraw it before the due date, then you will get penalties. So
Yes.
that's why that terms, you have to understand the terms,
Yeah.
right? That's why they offer higher interest rate, because
Yes.
you cannot withdraw
Right.
as you wish.
Yeah,
right?
flexibility.
I have
Yeah.
that though. I have a deposit where I just felt like it's just a money that I put away. I don't even think about it. Even like the book and whatnot, I don't know where I put it. I told my husband, "You'll just keep it," because I know myself. I would be like, I wanted something and I just want to take it out. But then after a couple of years, I was like, wow. It turns out, I have like all
It's
of
quite
this
good amount,
money.
right?
Yes.
So, so is it safe to assume that when interest rates are generally spiking like this, and we'll talk on the credit side in a minute, but when it comes to just having higher term deposits or higher savings interest rates, would it be advisable to keep the money a little more I want to say liquid, but if it is term deposit, it is more liquid.
Yep.
Or when interest rates are then lower, then we should be looking for other investment vehicles, such as mutual funds, like you said.
Yeah, because I mean, like well, especially at this point, you know, the thing that when the government increasing the interest, because you know, right now the economy itself is not that stable, right? I mean, like with the warning of the recession, the global recession ahead, that's why we have to keep cautious, and that's why people tend to be, you know, more conservative, more moderate, more conservative, and that's why they just want to keep their money so that amounts are still available.
Right.
Well, while we see now at the capital market, it is very fluctuative right now,
Yes.
right? The IDX composite is, you know, very high, up and down, and again, it depends on us. I mean, like if we look for stability, if we don't really want to be that aggressive and we don't want to lose our money, I think it's better for us to save in a deposit or mutual funds or even, you know, the bonds.
Right.
Because right now, it's quite interesting. And I mean, like the government bonds right now, they are also, you know, it's not that very long term, right? Maybe some 2 or 3 years. If you can manage to put a balance there for 2 or 3 years, then maybe it's good for you to, you know, set aside some money, and maybe in the next 2 or 3 years you can say, well,
Yeah.
I still have some money.
Yes.
Right.
So let's flip this. Let's talk about credit.
Yeah.
Whenever
Right.
interest rates
Especially
go up,
you.
they don't go up in just yet. And I had to deal with this. I was very lucky to
Exactly.
get it right under the wire because I know
Right.
interest rates have gone up. I
Right.
luckily applied, put my application date right before, and we still.
Just only days apart, right, Peter?
Yeah,
Like,
we
you
still
were
had
talking about
we still had to
December.
fight for it. They were still saying,
Yeah.
well, interest rates are up now. I said, well,
Yeah.
I applied before, so and then
Right.
we negotiated and worked
for
it
you.
out. But not everyone is that lucky. These days,
Yeah.
the interest rates are going up. So when it comes to credit, what's the right way to approach if we do need to take out any sort of small loan or perhaps a mortgage? What are some of the things that need to be considered? You mentioned that a global recession is taking place, may hit us in Indonesia this year. What are some of the most important things we should think about?
Well, yeah, with the increasing interest rate means for the credit, it will be increasing as well. So if
Yes.
we want to take a loan, then the cost of the expenses will be higher. So we have to really being cautious to calculate how much interest that we will be paying. And of course, we have to understand as well, you know, how the interest rate will be calculated. You know,
Yeah.
there is, you know, there's a fixed interest rate, you know, where you pay a
You
fixed
lock in
amount.
for a certain amount of
Right,
time.
right. And then there will be floating interest rate, because then, of course, you will be following the market interest rate every
That's
month.
scary.
Yeah, because the bank central will be updating it every month,
Yes.
right? And there's also, you know, a flat rate. Flat
Yeah.
rate is, you know, normally when you apply for a short-term loan, you know, like KTA or, you know, usually they will calculate with the loan principal, the first amount that when you owe the money, they will, you know, just, like, let's say you will take a loan for 1 year. So they will calculate for 12 months. They will calculate it as evenly, with the same amount.
Right.
It's flat, right? And of course, then because after we know how much is the interest that we have to pay, we have to really understand what is actually our capacity to pay. Is it really affordable to us?
On a monthly basis.
Yeah.
Right,
Yeah.
right.
Right.
If it is flat, then of course we know, okay, maybe I have to pay like 1 million a month. Okay, I can
It's
pay for
okay.
it. But when it is floating and we don't know
Yeah.
the interest rate is whether increasing or decreasing,
Yeah.
then we have to have a spare amount of money, right?
Well,
Yeah.
would it be then advisable, like a safer approach for us to, let's say right now interest rates are uncertain, they may continue to rise, that we should perhaps consider lowering the capital amount that we're trying to borrow, so perhaps keep that monthly payment manageable? For example, if we're looking for a house, now that it's kind of more uncertain, should we look for perhaps a smaller house just so we have more leeway, so we don't stretch ourselves
Or
too
maybe
thin?
a bigger deposit, no? Or a down payment.
Yes,
Yeah,
that could be
be ideal.
the ideas as well, right? But the thing is, of course, we have to understand the type of loans itself. I mean, like if it is a productive loan, like for example, if you said you're buying a house, we know that the house is, you know, the value of the house is increasing.
Correct.
So again, if you have the capacity to pay the loan, it will be okay for you to take the housing loan right now.
Right.
But if you take the loan for something that is very consumptive, then maybe you have to reconsider whether
A
you
business
need
loan or something.
Right, whether you really have to do it or not, right?
Yeah.
And so that's the first thing. And the second thing is, you know, normally when we talk about loan, the banks or other financial institutions, they will say that the loan is actually per annum, right? The interest rate is per annum. But right now, there's so many, like online loans
Yes.
or pay later, where they actually offer a loan not just on annual, the interest rate is not per annum, but per month or even per day.
Yes.
So that's why we have to be very careful when they say, oh, this is only 1% per month.
Correct.
Right.
Yes.
Wait, 1% per month is 12% per year.
Yeah.
Is that okay? But sometimes maybe, it's 2% or 3%. We have to really calculate.
And if you talk about daily interest, you mean the interest is added on per day, and then the next day it's calculated with the capital amount plus the 1% that you already
It's
had.
compounded.
Right.
Okay, so it
Yeah.
compounds over time, and you
That's
might
why
think
it
it's
gets
just 1% a
difficult.
day, but
Right.
multiply that by 365.
And we've seen a lot of these cases, especially in the public nowadays,
Yeah.
right? They would take those kind of loans, especially online and whatnot,
Right.
and
Easy
then they
to
got
approve.
like, yeah, and those people were kind of just, pondering on them every day for them to get their money back.
Yeah,
And which is people is already hard. They
It's
get
already,
the loan.
there's a
it's
reason
already-
why they needed to borrow money. to begin
Exactly,
with.
exactly.
Right.
Now, I
So-
just want to further stretch on this, Metta, in regards to what Paul had mentioned before. Let's say you want to make an investment, especially this is the new year, and then you want to get a loan in a bank. Now, like you said before, with the global recession, it is suspected, and we've seen a lot of countries right now, it's already seeing that, the inflations and whatnot. What should we take account, especially if it's for a business, like an investment for a business?
Well, of course, if we want to look for safety, but I guess for me right now, I think for now it's better for us to be conservative, moderate, right? So maybe we can take advantage of this higher interest rate, for savings in the, for the money market,
Right.
better than the capital market,
Yeah.
right? But of course, and we have to be very careful of what kind of investment that is offered.
Right.
The interest rate is the good indication of, if it is legit or not,
Yeah.
right? At this point of time, there's many kind of investment offered by the, not just bank or financial institution, but right now there are a lot of schemes, right? Investment schemes that is maybe not
Yes.
legal, some
Yeah.
illegal investments. So
Right.
that's what we have to be avoided. And
Yeah.
one of the indication is actually the amount of interest they offer.
Right. Like you said, though, we have to prepare, ourselves for the interest itself. And sometimes when we're making a new business, we don't know what's going to happen, and we don't know the forecast, at least for 3 months or 6 months ahead, or even 1 year ahead. And that has to be calculated in a correct way.
Right.
Yeah, most businesses take some time to earn
Yeah.
a profit even. So
Yes.
those
Right.
early few months are
Right.
going to be very crucial.
Right.
Right. And for business as well, because the higher interest rate, it means that the cost of doing business is very high right now,
That's
right?
right.
That's why they have to be very careful in their pricing as well.
Yeah.
Because they have to ensure that the market is still there for the
Yes.
customer. They have to maintain the customer, but they have to maintain the quality of their products, their services.
You're right.
And it's going to be difficult for them, but
All of that has a little price tag to it.
Yeah.
Nothing's free. Metta, thank you so much for joining
Oh.
us here today. We hope that we're able to inspire those out there that are planning to make some changes to their own lives financially, or perhaps your businesses as well.
Yeah.
But that does it for our discussion. Thank you, Metta. Come back anytime.
thank you. Thank you, Paul.
A
Thank you,
regular right
Carol.
here in the C Morning Show.
Absolutely. We'll be back with more updates for you from around the world. In case you missed it, stay with us here on the C Morning Show. We'll be right back after this.